Well, the first trading week for November in the PSE is heating up, with investors bracing for Thursday's GDP release and dealing with the recently released October inflation figures. And add to that a bevy of third-quarter earnings releases to spice things up. Well, Jomar Lacson of ATR Research is with us to talk about all of this and more. And I have to lead off, Jomar, with that 6.7% reading for inflation. There doesn't seem like there's any signs of it really starting to cool down. How do you think markets are going to react to this figure today? Or are people just already... are they immune already to these high inflationary figures, at least in terms of market sentiment?
I think that the way we looked at it, consensus was actually 6.8. So 6.7 is slightly below. But at the end of the day, it's still too early to tell whether this has peaked. I think the general message of the central bank is that they expect the inflation number to be reflective of a tapering off of inflation already. And it's possible, given the 6.7 that we have today, it is possible. But I guess it's just still too early to tell. Now, the probability, though, is high that it is tapering off primarily because of the fuel rollbacks that have been kind of like announced. But there are also other factors to consider, such as the wage hike that has been approved for Metro Manila. Although it's small, it could still have a contributory effect to inflation. But as of now, we can say what the facts are. The rollback is there, and much of the inflation that we've seen that has moved up is on the energy side as well as the rice. So I think that the current situation still bears monitoring. Monitoring.
So we're seeing some stability, at least in terms of food prices, oil prices starting to come down in recent weeks. Do you think it's enough for the PSP to perhaps to hold off on pulling the trigger? Or do you think that another rate hike in the next 2 months might be on the cards from the Bangko Sentral?
I think what's going to drive the message, or at least the strategy, is going to be the GDP numbers rather than inflation, because as you know, that this is cost push type of inflation, and what the central bank is trying to manage is really the demand side of the money demand side of inflation. So I think that's where the GDP numbers that will be coming out will be more evidentiary and would guide us through what's the probability of another hike before the year ends. I think they've already communicated that at least one is being considered, and holding off, I think, will really depend on GDP.
All right. And speaking of GDP, does ATR have an outlook or a figure that you're eyeing at the moment? A median estimates among economists surveyed by Bloomberg has it at 6.2%. Where do you guys see it heading? And is inflation going to play a factor in either in influencing this particular number?
Well, what would be more influential is on the peso-dollar rate.
Okay.
I think that what has led us to the 6% during the second quarter for GDP was really on the balance of trade rather than the main components, which is consumption, investment, and government. Those have been kicking in very, very strongly if you actually look at it for GDP. But it's really that the value is being lost, if you want to look at it from that perspective, by importation. So the production is actually being taken out elsewhere. So rather than produce it here and look at home, we are importing more, and that's sort of like cutting back on that growth. So the peso-dollar rate is kind of more important at this point. I think that when we're looking at it, we're still fairly bullish about the GDP growth because it's coming from the right sources, which is like infrastructure spending, private consumption remains strong, and even on the real estate, you can see construction still very, very high. So the growth is there. It's just a matter of when you account for that growth, balance of trade actually has a strong pull at this point.
I'm glad you brought up the peso because it had been strengthening over the last couple of days. And in fact, actually, Jomar, when you take a look at the markets about 9 minutes into the open today, yes, inflation's at 6.7%, but take a look at the PSE, recording a solid day actually at the open, about 0.4% up. Even the peso just taking a touch of strength there at 53.25. Are you surprised by the bullish reaction of the PSE in light of these higher inflation figures, or is this just a sign of the PSE perhaps just getting used to these headwinds with regards to macro figures?
I think the market's just a bit there's a slight inefficiency in the market, which basically means that we're digesting the 6.7% right now. I think that the fact that it's kind of flat from the previous month, that's sending your forecasts to be like I said, it could go up, could go down. We still have to monitor it, and I think that's what the market's trying to do, trying to digest whether it validates their initial assumptions going into today's inflation number, and if it does, then they the markets are probably saying yes, it's a positive sign. But then again, if further data such as peso dollar rate, if it does weaken, that actually could shift the expectations to negative. So it's a bit early. I think the market's just a bit slow at this point.
Okay, so it's a bit early right now, Jomar, but what do you think might sway sentiment, at least from ATR's point of view, towards the positive side on markets, towards positive uptick, or towards a further sell-off? What do you think is going to tip the balance, despite the fact that it's still too early to tell?
I think it's going to be the corporate earnings numbers. We've seen, at least just looking at the past reports, I think we're looking at least for the index.
For the index names.
Yeah, index names. It's something like about 12% for the third quarter, but that's only about 25% of the index. So it's not necessarily fully representative of the growth, but that's actually pretty good considering things. But we expect that to kind of like be tapered off with more bank numbers, telecommunications which came out, Globe has just come out. It's a fairly slow third quarter. So these are the things that we're kind of looking out for. If I look at the second quarter, we were looking at around 7% core earnings growth. So an acceleration from that in the third quarter is actually might be taken positively by the market.
And I'm glad you brought up Globe also there, because it did stand out. There's still profits are still growing by about 2%. You see mobile subscriber base actually up by about 10%. But rather lackluster compared to profit growth over the last couple of quarters. Why do you think Globe seems to have shifted down a couple of gears in the previous quarter with regards to profits, and also their outlook with regards to the dividend policy?
Yeah, I have to go through the numbers first for Globe. I would suspect it's about on the margin side. But having said that, I think with the more relevant development is the downgrade of their dividend payout guidance. The PLDT, when it downgraded their dividend payout from 100% or 75%, with a look back to like 90, then 80, then 65. Those were taken negatively against the stock. But then again, so it could happen for Globe. That the reduction in dividend payout might be taken negatively. But having said that, Globe has never been seen as a yield play the way PLDT had been. And at the end of the day, I think that's a good development for both companies to reduce their payout, because they really need to have sufficient cash flow for the battle ahead. So we know that the third player should be announced this week, if I'm not mistaken. So if I were to be in their shoes, they should be at least thinking about how much capex is the third player going to be putting out. What's the level of service that's going to be put out there? Because the level of service will dictate the amount of capex that you need to put out. So saving up on that cash is actually a prudent strategy at this point. So if I were an investor, look at this as something possible.
All right, and finally, Jomar, we go from one slightly lackluster release to one that's showing signs of improvement. We're talking about security back here. We're seeing net income for a change rising in the third quarter by 5%, but still down about 11% year to date. Can you talk to me about what the ATR's view is with regards to security bank, and whether or not these recent figures are either changing or making you guys revisit your outlook on security bank?
Well, I think on security bank, what we like about it is the fact that it has it's now kind of cheap. I think it's below price to book, below 1 times price to book. As far as earnings concerned, we're looking at it more from an industry perspective, which means that the guidance so far that we're getting is that loan growth is going to be decelerating for the industry, primarily because, well, 2 reasons. One, I guess, is that there's expectations over GDP decelerating, so the demand for loans may not be there. Interest rates are also going up, so that pricing itself might actually stem some of the demand. And at the same time, the capital that they've raised, no, for some of the SecBs, like one of the higher capitalized banks, they have to consume or burn into that capital a bit slower at this point, just to preserve it, given that the markets are kind of down at this point. So if you're going to raise another SRO or a capital call for any bank, not necessarily SecB, it would be at a higher cost. So you have to go through the capital that you have right now in a more efficient manner. So I think that's going to dictate profitability going to 2019. At least there, we're going to look at interest rates. So I think that what we can see right now from what has been reported earnings from BDO, that it's more like there's now that expected expansion of the NIMs, the net interest margins for banks, which actually bodes well for profitability. But at the same time, loan growth, I think we need to be a bit more moderate. Expectations should be moderated.
So very quickly, ATR's outlook on the banking sector in 2019, given all of these risk factors and that you've outlined, what is the outlook on the banks heading into the next year?
I think we're looking at it a bit more, well, we're positive on it, 2018. I think we're still maintaining the same view, but for different reasons. As I mentioned, it's more about the profitability that's the sector that might improve because of NIM expansion. That will happen. We were expecting it in 2018, but it seems there's some timing effect that there's a delayed benefit from rising interest rates as far as profitability is concerned. So we're still positive for banks.
So keeping the faith with the banks, basically, for heading into 2019. Jomar Lacson from ATR, thanks again for joining us this morning and helping us digest some of these figures that are coming out fast and furious this week.
Okay, thank you.
It's time now to pause for another quick break, and right after that, they disrupted the taxi space years ago. Now Grab is taking on the other king of the road here in the Philippines, the tricycle. And the stock market not getting any love lately from foreign investors, but we will be speaking with one that's looking to set up shop here. Stay with us.